The Nifty is opening 245 points higher.
We have Nifty sitting with gains of 370 points.
At least you can stick your neck out and say that the market rally will not be sold into.
Metals as well as IT, both global facing in nature, they bounce back in style today. But the banking names, that's the big weight in there. That gained, and that's what gave the Nifty some kind of basis. Good trading session. Hello and welcome to CNBC-TV18. You're watching Markets Today, the show we track around 6 hours of the day's trading action in just 5 headlines. I'm Nigel D'Souza. Let's get straight to the top headlines for the day. Positive global cues lift the Wall Street. The sensex gains 1,300 points. The Nifty gains 400 points. All sectoral indices end in the green, with financials leading the rebound. HDFC Bank reports heady loan growth, as does HDFC IndusInd Bank, couples growth with market share gains. And Mahindra & Mahindra Financial sees growth with asset quality improvement. Even smaller lenders surprise positively. Metal stocks ride the sharp rally in commodity prices. The index surges 3%. Healthy output growth from Vedanta and Hindustan Zinc adds to the optimism. Positive business updates coming in from Adani Ports, Avenue Supermarts, Angel One and NCC power the stocks up, while Marico is a rare loser. The rupee gains more than 30 paise against the dollar, but stays above that 81 mark. The greenback weakens against most currencies after a strong run in the last couple of weeks. Well, here's the lineup that we have on the show for you. It's a power-packed show as always. In Market Opinion, we have Tahir Badshah, CIO Equities at Invesco Mutual Fund, and Ed Yardeni, President at Yardeni Research. In Corporate Voices, we have Mr. KK Mistry, Vice Chairman and CEO HDFC, Hemant Sikka of Mahindra & Mahindra, and Bharat Madan, Group CFO of Escorts, who vote up. Well, positive global cues helped the bulls regain some lost ground. The sensex gained 1,300 points. The Nifty gained close to around 400 points. The Nifty is back over that 17,300 odd mark, closer to that level actually. The mid-caps, well, they fared even better with the index rallying close to around 3%. Financials as well were not far behind. Well, Rima joins us to run us through the day's trading action. Rima?
Market surge led by a big global risk-on rally. The Sensex gaining more than 1,200 points. The Nifty well above 17,250. All the Nifty key indices closed in the green. The mid-cap index also soared, with the advanced decline ratio looking solid, with nearly 5 stocks in the green for 1 in the red. The leadership came in from the banking stocks. In here, we got some very strong business updates from banks as well as NBFCs. So those numbers looked encouraging, and that fueled the rally in the banking sector. The Nifty Bank was up more than about 1,000 odd points. But IT and metals as well contributed on the way up. So talking about individual stocks, IndusInd Bank and M&M Financials business updates look very strong. Those stocks were higher in trade. In the metals pack, you had Hindalco, JSW Steel, Tata Steel rallying, as there was this big rally that we saw in global markets, not just in US markets overnight, but there was follow through in Asia as well as Europe. And IT stocks ahead of the earnings season saw strength led by Wipro, TCS as well as Infosys. Tomorrow, Indian markets are shut. Today, there was no trade taking place in China as well as Hong Kong. So there was a bit of a truncated week taking place across Asia, but this turned out to be a solid session for our markets.
Thanks a lot for that, Rima. Well, in Market Opinion, Tahir Badshah, CIO Equities at Invesco Mutual Fund, said that despite the rate hikes, inflation hasn't seen much decline in developed markets, which is slightly concerning. He also gave his view on financials. Take a look.
There's been a fair bit of interest rate highs that we've seen in the system, but concomitantly we've not really seen as much of inflation decline come along with it, especially as far as the developed markets are concerned. So to my mind, I think while there is a growing clamor from different parts to kind of slow down in terms of rate hikes, etc., and give the economy a little bit of chance, we've seen deposit growth trail credit growth for a fair bit now, and that is something which probably is something to be watched out, at least as far as the profitability of the banks is concerned. So I think barring that, I think we are reasonably fine as far as the financial sector is concerned. Even though I kind of worry at the margin that our rate cycle might probably incrementally is looking like being a little higher than what we started off believing 6 months or maybe at the start of the year. So that risk apart, I think more or less the banking sector looks fine to me.
Well, in more opinion, we had Ed Yardeni, president at Yardeni Research. He says that September creates buying opportunities and the worst is over on the downside. He added that the next pivot by the US Fed is expected to be less hawkish. Let's hear him out.
I think it's a relief rally. I'm not particularly bearish. I think the market's going to go sideways with a lot of volatility. We're still going to have the Federal Reserve raising the Fed funds rate at their November meeting. That'll be early November. So in about a month, we're probably going to get another 75 basis point increase in the Fed funds rate. But a lot can happen in 1 month, as we just saw in September. And it does feel as though September was the worst month, is a bad month historically. And October sometimes does better, especially if September created some buying opportunities. So I think the worst is over in terms of the downside, but I don't see a tremendous amount of upside anytime soon. I think we need to get to a point where the Fed clearly is done tightening. When the Fed changes its opinion, that's a pivot, but it sometimes can be based on data that they didn't expect to go the way it went. What we saw is in July, the Fed was still talking about possibly pausing in September or November. And in August, they were suddenly talking about just raising interest rates as far as necessary to bring inflation down. So that was a pretty hawkish pivot. And I think the next pivot that the markets are expecting is a more dovish pivot, or let's call it a less hawkish pivot based on an economy that's slowing down with inflation continuing to moderate.
Well, to the second headline now, Mahindra & Mahindra Financial, IndusInd Bank and HDFC rallied between 2 to more than 10% on the back of their Q2 business updates. Mahindra & Mahindra, Financial, they saw growth as well as asset quality improvement, and that explains why the stock was off to the races. Abhishek Kothari standing by to fill us in with a quick analysis on all those names. Abhishek?
Well, to begin with, IndusInd Bank has given the business update wherein they have gained market share in the loan book. So sequentially, that is quarter on quarter, deposit growth is perhaps the best in 5 quarters and loan growth is the best in last 4 quarters. So deposit growth is of 14.7% YOY and about 4.2% sequentially, while the loan growth is at 17.6% YOY and about 4.7% sequentially. For the first time, M&M Finance has given a number on their asset quality in the business update. So the gross NPA over there has improved to 7% when compared to 8% in the previous quarter. Disbursements remain strong. For the month of September, it was close to 4,100 crore, which is up about more than 9% on a month-on-month basis. The collection efficiency has improved 98% for the month of September when compared to 96% in August and 96% in June. HDFC Limited, the loans assigned is up 28% YOY but down about 4% sequentially. The dividend income was strong, up about 16% YOY and 98% quarter on quarter, while the individual loans sold is up 27% YOY and about 6.2% sequentially. On HDFC Bank, the loan growth has surprised positively, perhaps the best loan growth in 14 quarters on a YOY basis. So deposits are up 19% YOY and about 4.3% sequentially. The loan growth is at 23.5% YOY and more than 6% quarter on quarter. X of the pool that they have with HDFC Limited, the loan growth remains strong at 23.4% YOY and about 6.2% sequentially. The CD ratio has also improved, which indicates that the net interest margin may remain healthy. Back to you.
Thanks a lot for that, Abhishek. Well, meanwhile, KK Mistry of HDFC said that the RBI rate hikes may continue for some time and that it's a difficult situation for the Reserve Bank of India. Let's hear him out.
The problem is that when Fed increases rates, then it puts some degree of pressure on the rupee, on the currency. And if the rupee depreciates, then it starts putting indirectly pressure on inflation because oil prices, the cost of imports becomes higher because you're paying in rupees for what you're importing. So it's a difficult situation for RBI to handle.
Well, moving to another financial services company, Fino Payments, Rishi Gupta of the company told CNBC-TV18 that it expects to cross the 1 crore mark as far as customers are concerned, and its merchant network will double in the next 3 years. Let's hear him out.
I expect to cross 1 crore customers in the next 24 months. and our network should double to more than 2 million merchants in the next 3 years. On the CMS side also, where we have clients, there we have seen nearly a growth of about 40% on H1 to H1, from 111 customers to 153 customers per se. So this has been a good H1. I would say we are quite happy with the growth which we are seeing.
Which brings us to the third headline now. Metal stocks, well, they found their shine with the index surging close to 3% as they ride the sharp rally that we saw in commodity prices. Healthy output from Vedanta as well as Hindustan Zinc, well, it added to the optimism as well. Manisha Gupta, she's standing by to run us through all of those details. Manisha?
Well, yes, it has been a strong day for the metal prices, where we have seen the weakness in US dollar also being a supportive factor here. So whether it's copper, aluminum, zinc, nickel, all of that was trading in the positive side. Support also came in from the fact that the soft economic data that we have seen come in from China, Europe or UK would perhaps mean that you wouldn't see aggressive rate hikes going forward. Apart from that, the Chinese demand also seems to be picking up. The China stimulus expectations have been adding premium to prices also. The Chinese copper spot premium, by the way, is the highest since November 2021. So that tells you that the on-ground demand is actually robust. Apart from that, Europe also has been cutting production. And when you look at aluminum alone, 8 to 9 lakh tons of aluminum production cut is what we have seen happen in the past 1 year. That can be supportive for those prices. Apart from that, the major bullish news also comes in from the fact that LME, or the London Metal Exchange, is now considering a consultation on whether or not the Russian metals should be traded or stored on LME bonded warehouses or the exchange itself. If that really happens, then you could be looking at some supply destruction or even supply deficit coming into the markets that could be supportive for prices. Markets do believe that it is going to be about the US non-farm payroll data on Friday as well. That would tell you on what direction the metal prices do take.
Thanks a lot for that, Manisha. Well, let's run you through a couple of details that came in from Vedanta and Hindustan Zinc. The operational performance looked pretty okay. Production numbers were a little bit higher, in the aluminium business, which is bulk of their business. But their Jasukta facility, well, that in fact delivered a good number. So that was encouraging. Moving to their India Zinc business, which is effectively the Hindustan Zinc business. Out there, the integrated saleable metal, that's lead as well as zinc, put it together, that came in high by close to around 18%. Even the saleable silver production, well, that jumped up by close to 28%. So both those two factors did play out in their favor. On their power side of the business, well, there was a good bounce back. We have been hearing that power demand has been strong. And in fact, their TSPL venture, which is bulk of their power sales, that's close to around 80%. That jumped up by close to 50%. For the unit on the whole, it was up by close to around 24%. International Zinc, smaller component of their business, but the Gamesburg mine, that's ramping up nicely, and that explains why the total volumes are up by close to around 35%. The oil and gas business, well, that's a bit of a sore point, and that continues to struggle. There was a bit of a degrowth on that front. And other smaller verticals like like steel as well, iron ore, there were no negative surprises on that front. Well, for the time being, though, we'll slip into a short break, but you stay with us. We'll be back in a jiffy with the other headlines. Welcome back. You're with us on Markets Today. Well, we'll run through 3 of the headlines. Let's get you through the remaining 2. The 4th headline today: Adani Port surged close to around 5% on the back of an operational update. Vivek Iyer joins us to run us through all of those details. Well, Vivek, take us through this business update. It seems the street liked it quite a bit.
Well, absolutely. When you're talking about Adani Ports, yesterday, the entire pack saw quite a bit of a sell-off, and Adani Ports wasn't an exception. In fact, the stock was down almost 4.5% in the session yesterday. Today, it's recouped all of the losses. In fact, trading above yesterday's, dip for yesterday's high as well. Now, when you're talking about what exactly has transpired, yesterday the company came out with an operational update, and when you're talking about this particular update, some strong operational performance coming through as far as the month of September is concerned in terms of the volumes handled as far as the ports are concerned. So the company recorded a 13% year-on-year growth as far as the cargo volumes were concerned for September 2022, and the company says that this is in line with the average monthly run rate that they had earlier guided for. They were earlier guiding for 350 to 360 million metric tons. Now, when you're talking about the first 6 months of FY23, the company has managed almost 177 million metric tons of cargo which is a gain of almost 11% on a year-on-year basis. So now this involves both the East Coast as well as the West Coast. The East Coast volumes were up almost 13%, led by the Krishnapatnam port, the Gangavaram port, as well as the Kattupalli and Ennore port combined. On the other hand, the West Coast volumes, which were up 10%, were aided by Mundra, Dahej, Tuna, as well as the Goa ports.
Got that. Thanks for that, Vivek. Well, moving on then, let's shift focus to the auto space. India's largest tractor manufacturer, that's Mahindra & Mahindra, has raised the industry guidance post strong sales in September. The company has raised its growth guidance for tractors from around 3 to around 5% earlier to the upper band. That's 5% for FY23. Similarly, Escorts Kubota expects the industry to grow by around 5 to around 7% for FY23. Sonia Shenoy, she's standing by to run us through all of those details. Sonia?
The big story is this, right? Tractor makers, because of very strong sales in September, have gone ahead and raised their full-year growth guidance for the industry. M&M has raised the tractor growth guidance from 3 to 5% earlier to 5% plus now, while Escorts has raised the guidance. They said that the industry will grow 5 to 7% year-on-year in FY23. Now, the growth rates have been picking up over the last many months. M&M has reported its highest ever tractor sales in the month of September, and they said that the tractor segment market share has picked up and will stay steady at about 40% plus. But just take a look at the growth rates for both M&M and Escorts over the last 4 months. Now, in June and July, M&M saw a degrowth of 13 and 14% respectively. It improved to a growth of 1% and then 20% in September. Similar is the case for Escorts. In June and July, a degrowth over there, and then 7.5% in August, followed by almost 39% in September. So what are the reasons for an improvement in tractor demand? One, of course, is the onset of the early festive season, so the year-on-year numbers look pretty good. Next, you have the above normal monsoon, which has led to an improved reservoir level and hence improved crop production. The crop prices are also holding quite firm, and that has led to more demand. And the Kharif crop harvesting will start soon. Hence, the order book is looking pretty good for many of these companies. But let's not forget that M&M has been one of the strongest stocks. It's rallied 50% this year already, while Escorts Kubota as well has seen about an 11% rally. But yes, raising the tractor industry guidance is the big story. In fact, let's listen into the key takeaways that we had from our conversations with both M&M and Escorts.
In the latest estimates on growth released by TMA, which is Tractors and Mechanization Association, we have come up with a 5% plus growth number there. So I think that 3 to 5 band is now 5% plus in that sense. I think all that phantom demand has been serviced well by us and other players in the industry. How I would see it is that interest rate and upcycle is always a dampener for any industry that you would say, especially the industry like auto and tractors, which are like heavily financed.
The first 6 months of this fiscal, the industry has already grown more than 10% now. So even if you assume a flat industry in the balance of the year, you will still grow more than 5%. So obviously the guidance, I think what the peers are giving, I think is right. So we have been saying it will be mid-single digit growth, so it can be anywhere between 5 to 7% now.
Well, Angel One surged more than 10% in trade today on the back of a strong showing in the second quarter business update. Sirbhi is standing by to run us through a quick analysis on that front. Sirbhi?
Their gross client acquisition saw a marginal decline and is at 3.9 lakhs versus 4.5 lakhs in the month of August. Their total client base, however, grew by 3.4% on a month-on-month basis and now is at 1.16 crores. Their average daily turnover saw a growth of 11% and the number of orders were up nearly 25% at 9 crores. For the F&O segment, their market share remained constant, but commodity segment, that's where they gained market share of nearly 170 basis points and is now at 53%.
Okay, all right, got that, Sirbhi. Thanks so much for that. Well, Avenue Supermarts released its second quarter business update, posting record revenue collection in excess of 10,000 crore rupees. But Marico's second quarter business update indicated low single-digit growth in India. Mangalam is standing by to fill us in with a quick analysis on both those two stocks. Mangalam?
Well, like you said, Avenue Supermarts is doing well in today's trading session on the back of its second quarter updates. The important part is that the revenues have grown both year on year as well as quarter on quarter. 36% jump year on year, taking the revenues upwards of 10,300 crores for the first time, crossing the 10,000 crore mark on a standalone basis, a 6% jump quarter on quarter, and it is a record quarterly revenue that the company has reported. Importantly, they've also added 8 stores, and this over and above the 10 stores that they've added in the first quarter itself. So first half of this year, 18 stores have been added, on track to achieve the 40 to 50 stores that the analysts are factoring in for this year itself. And the important part is that the last 3 years, which are the pandemic-led years, the company added almost 30% of its store strength, almost 118 odd stores. So that's telling you that going forward, hoping that there is no pandemic-led distraction, these stores will provide further headroom for growth. The reason why the stock, however, is just limited in its gains is because valuations have always been a bone of contention for Avenue Supermarts, which is why, while it's trading in the green, it is off its 52-week high and currently just holding about in the green itself by about 1%.
Okay, thanks, Mangalam, for that. Well, that brings us to the fifth headline today. The rupee gained more than 30 paise against the dollar. The Indian currency remains above that 81 odd mark against the dollar. Keep in mind the greenback, it did weaken a little bit against most currencies after the strong run-up we have seen in the last few weeks. Well, the insurance sector is prepping itself for a major reform. The insurance regulator is set to operationalize Bima Sugam, an interface where all life and general insurance policies will be listed. How would it work? Well, Yash Chen is standing by to tell us exactly that. Yash.
The two-letter word Bima Sugam could actually prove to be the biggest reform in the insurance sector in the days to come. The insurance regulator has asked insurance companies to operationalize Bima Sugam by January 2023. But what is Bima Sugam? Think of it as an Amazon-like platform where all life and general insurance policies will be listed. Bima Sugam will be responsible for sale, servicing and claims coming from these insurance policies. Who can buy insurance policies from Bima Sugam? Aggregators like Policy Bazaar, brokers, banks, insurance agents act as facilitators or bridge in terms of selling insurance policies through Bima Sugam to individuals. What's the best part? You as an individual can also buy your life, motor or health insurance policy through Bima Sugam. Now, who gets the funds to start Bima Sugam and who owns this platform? Bima Sugam will need approximately 85 crore rupees as initial capital. Insurance companies are expected to be major shareholders of this insurance platform. So initially, some general insurance companies will hold about 30% stake in Bima Sugam and another 30% will be held by some life insurance companies. A list of some of these general and life insurance companies you'd be able to see on your screen. Now, as more funds are required for the operations of Bima Sugam, more insurance companies will be roped in as investors. Now, the most important part, what's in it for you, me, and many other policyholders? Bima Sugam is expected to significantly reduce commission paid by insurance companies. How? Let's look at life insurance sector. Life insurance companies pay around 21 to 45% commission on the sale of their policies depending on the policy term. Assuming that an individual buys a 10-year insurance saving policy, if the premium charged on this policy is about 100 rupees, then the commission included in this 100 rupees would be around 30 rupees, which would be paid by the life insurance company to the insurance agent, aggregator or the broker. This would leave the life insurance company with just 70 rupees to invest and give returns to the policyholder as his policy matures. Now, the commission on Bima Sugam could come down to just about 5% as compared to the earlier 30%, leaving the insurance company with much larger sum to invest on behalf of the policyholder. On a term insurance policy, with the same calculation, straight discount could be given on the premium to the same policyholder. Now let's look at the general insurance space. If on a motor or a health insurance policy, a general insurance company pays a total commission of 19%, Bima Sugam could bring down that commission to just about 5%. What could that look like? If the motor or the health insurance policy through an agent, broker or an aggregator comes to a premium of about 100 rupees, then the same policy through Bima Sugam would actually come to you at a premium of just about 85 rupees.
Got that, Yash. Thanks so much for putting together that interesting piece. Well, we'll run out of time, so we'll wrap up on this edition of Markets Today. Thanks so much for watching.